Tiger Brand says it sees no signs of much improvement in the health of the consumer over the next 12 months. The company, which sells brands like bread, rice, maize, pasta and a whole range of consumer goods, depends largely on stronger consumer spending. It says increasing competition and price pressure squeezed margins and forced the company to absorb about 250 million rand worth of costs.
As economies come under strain and your top line revenues come under pressure because consumers are saying, I'm not in a position to pay or to buy as much, etc. You have to take costs out if you are to maintain the momentum in the business. That is driven by cost push. So you remember, we sell rice, we sell maize meal, we sell bread. There are lots of soft commodity cost price pushes that we saw during the year.
But the biggest headache for the company remains its Nigerian business it acquired 2 years ago. It wrote down a further 105 million rand of the business after the 846 million rand write-down in the first half of the year.
What we did, as we had undertaken to do, is to look at the carrying value of the assets in DFM. We've taken another 105 million rand write-off. So it's 900 odd million rand. Prudently, we believe we have taken, and it's the correct thing to do. We are seeing the losses in that business come down quarter on quarter. They're really quite pleasing to see how that business is being turned around.
The company says it has no regrets about venturing into Nigeria and believes the market is key for its expansion plans. But some analysts beg to differ.
They made a reasonable recovery, and this has been a period of recovery. Will they carry on with the same impetus? I don't think so. I think we've learned a couple of very hard lessons, especially Tiger Brands and the move into Dangote Flour Mills. The only winners in that respect were those who sold the stocks from Dangote. And I think what we've got to realize is we don't know all about African markets. We've come to realize how tough it is.
The company declared a final dividend of R6.11 a share, taking the total for the year to R9.40. SABC News, Johannesburg.